Okay, we are live. The Prospero.ai live stream Wednesday, 3 p.m. There's a lot going on in the markets today. As our viewers trickle in, everybody should be in pretty good moods today with what's going on based off this FOMC meeting. I wasn't able to watch Jerome Powell speak, but just based off the statement they released, it seems to be very bullish for the market. The market's happy. Seems like they're slamming the door shut on any rate raises in the future. I saw they dropped their projections for next year from the rates being at 5.1% to 4.6%. So it seems like all good things for the market. And George, if you just want to, share your perspective on the FOMC meeting today.
Well, I think you did just say that we're going live at 11 a.m. EST, uh, which is
Can I
not right.
can I post correct that, or what should I do?
Yeah, I think you should send out another one saying sorry live now, 3 p.m. Man, we're bad at this, both of us. I did this the other day. But hey, maybe they'll get 2 emails and they'll see live 3 p.m. Yeah, I wanted to just check live like Fed Watch. Just let's look at the let's look at the ease. Wow. We're now at a 75% chance of ease for for March, which is incredible. Like people are like the market is like almost like 96% chance in May that we're getting an ease. Like it's happening. Like and predictably, like, this is the thing that I always said, that Bitcoin was going to start going crazy like before the first ease, like in anticipation of the first ease. So yes, I'm sure we could dig that out of the live stream vaults somewhere. But yeah, obviously, we always talk about this type of thing. You have to be cautious on both sides. And like I still hear a lot of like doom and gloom people, and like there's a difference. Like this is the nice thing about where I sit versus where you guys sit, and I try to like situate this kind of thing as much as possible, where it's like there's a lot of people trying to bullshit you out there. And it's fair to say, am I trying to bullshit you? Like I'm that kind of a skeptic, but hopefully I've proven to a lot of you that that isn't me. But like there are people that I trust that aren't bullshitting me, that think there might be some more severe pain coming for the economy, and that legitimately, like I will say on the other side the same thing that I say to you, like what about this, like what about tech? Could we see that like carrying it upwards? Could we see AI? Could we see that like carrying the market as a whole upwards? And they will of course say yes. Like, and that's the thing that we talk about here all the time, that there could be like pain. And we saw that pain with our America's Car short that did very, very well. They were basically charging off bad debts. So that's something that we've been on top of. And like that's the other lesson that I always teach you guys in terms of like having a macro thesis, which is just that like we've been expecting this consumer credit problems. So when America's Car came up as something, bad in our signals leading into their earnings, like for the first time, I always say don't do earnings. I was just like, wow, I've never seen America's Car this far down in our earnings. And then when I dug a little more, I saw that they make a lot of credit sales. And then I was like, okay, I'll bet on that. Because that's why I talk about having an investment thesis. Because like when you have a thesis already, which is, generally my thesis is that I'm worried about consumer credit. I saw some of those car defaults. I'm worried about how that's going to start to impact like certain areas of the economy, certain micro areas of the economy. So when I see the Prospero signals tell that story too, which is what I saw with America's Car, that's the kind of conviction I try to teach you guys. That's why I say it's important to have a macro view, because when the Prospero signals just like came along and aligned so nicely with my macro view. It was easy for me to say, you know what? Even though I'm going 5 longs and 2 shorts last week, like this is an easy short to pick up. This is the kind of short I want to pick up in this like scary economy. Let's be honest. It should be a scary time to short. Like even with all of these like bear concerns, legitimate bear concerns, like make no bones about it. This should be a scary time for anyone to short. It's a scary time for me to short. I'm looking over my shoulder a lot. I am kicking myself for I actually like I'll pull up so you guys see later in this a screenshot of me and the person that edits my emails, my newsletters. I had Broadcom in the newsletter and I pulled it out because I was worried that I wasn't sure tech was back. Bitcoin City. Oh yeah, sign me up. I'll do that. I'll do that election. But yes, I'm human like anyone else. I had Broadcom. My portfolio is up 10% Monday. I spent a lot of that day just like kicking myself because I actually had it highlighted. And this doesn't happen that often where I have something highlighted, and I'll show you the message to my editor where I was actually an hour and a half late sending him the newsletter because I was waffling on this Broadcom decision. And like I was waffling on the Broadcom decision because like of this thing that I'm telling you right now, which is like we're in clear bull territory. Like no doubt about it, all systems go on that. Very little in the actual performance of the market that would tell you that we're not in a bull market and that this bull market will continue. But like every bull, bear, etc. market is unique. And like what is very, very unique about this bull market is that there are insanely high consumer spending concerns for a bull market. Way too much credit mounting for a bull market. We typically see poor performance in the market on rate cuts for a bull market. There's all those caveats. So I think that that's the important thing to remember. And the other thing that I always preach is like, I was kicking myself and like talking to my friend a little about this and just basically saying, like she was just like, yeah, like, don't do this. It's all okay. Like blah, blah, blah. And my attitude when I'm in that mood is like, no, it's not okay. Like performance is everything. I got this wrong. I'm pissed. Like, and the thing is, eventually I forgive myself for these things. We all have to. But like that just tells you like sometimes like accepting your own humanity in these things is really important. And ultimately like what I settled on when I acknowledged that like yeah, I was going to have to stop beating myself up over this for a little bit. Where it's just like no, like I have to properly make sure that I've like sufficiently beat myself up but done it in a way where I know that I'm understanding the problem better and I'm not going to make the same mistake. And I think that's a really important part of investing for everyone. Like understanding that even the best make mistakes and you learn from them, you hold yourself accountable, you don't make excuses. And you understand that like being pissed at yourself is part of it. We all want to get things right all the time. Like it's what you do with that. And, sometimes you can have like literally what becomes a meta problem where you then get pissed at yourself for being pissed. And that snowballs. But like understand the mistake, move on from it. Like if I'm going to be real honest with you guys, like I don't really even know if I should have added Broadcom. I was feeling good about tech. Like there was some concerning patterns in the daily. I'll pull up the daily chart on it after I can show you what I was seeing. That would probably help when I we'll do a little tour of this when I start the screen sharing portion. But I'll show you guys what I was seeing. But yeah, I think that it's very, very important to look at that, and the lesson here in a roundabout way is we are in this bull market, but even when I'm wrong, but I am wrong because I'm being cautious and I'm trying to mitigate risks, I'm not that mad at myself. What I end up saying in terms of the lessons that I'm improving on is sometimes I'll miss information, just like you. I'll miss that a signal moved. I'll miss that. Those are the things where you have to work on what we say process. And I say a lot of the times. And there's been times, especially with the model portfolio and the 100 stocks I have in it, where I just miss that net option sentiment moved or something along those lines. And I say, okay, how can I make my process better? But yeah, I think that that is the very, very important part where you analyze am I just pissed at myself, or is this a hole in my process? And ultimately, there wasn't a hole in my process. I was just pissed at myself, and you have to move on from that.
So you talk about process all the time. So it's interesting to hear you say this. And before I respond, I just want to talk to our viewers and say everybody's got to be in a chipper mood with the way the market is moving today. So we should get those likes as high as possible. Everybody's got to be in good spirits. Let's try to get to 10 today, and we'll see. I'll check back in a few minutes after George speaks and see if we get there. But it's interesting to me, your whole beginning opening speech. You're talking about learning from mistakes and how mistakes can make you build better. And it just brought to my mind about, with something like a physical pursuit, like weightlifting, you break the muscle down, you get sore, you build it back, it comes back better. And then you have investing, which is like an intellectual pursuit, same kind of theory where you make a mistake, you have to make these mistakes to learn, and you get better from it. So it's interesting that that dynamic, both in physical and intellectual world, are true. And I think it's with anything. And I think you're right, but it sounds like you're still tentative with this market going higher and maybe in a position of taking profits if people are up on stocks going into the end of the year or maybe starting next year. Would you say that's accurate?
Well, you'll see me I'm actually pretty close to neutral, long short right now. Um, because last week we had some softening under our bull levels. Now we're back above them. We're holding those zones. Or this good news. I gotta go more bullish. But some of this conversation I'm having with the viewers is the same conversation I'm having with myself, where I'm just okay, we're gonna turn it bullish. And I'm actually gonna show you guys how I do this, where I'm gonna basically lop off underperforming shorts. I'm going to create a report. I'm going to lop off the shorts that have the worst current rating in the filters that we normally run. And then I'm going to add as I would after I lop them off. I'll look for new shorts and longs as I always do. I'll look for opportunistic. But it's time to lop off the shorts that are the shorts that are the highest in our signals, said one way, highest for bear, lowest overall, but high for bear. So that'll be a good little exercise we do at the end.
Well, one stock we've talked about several times, Eli Lilly now, you've been bullish on it for a while. And I thought it was fascinating when I saw the story this morning where this well-known investor, Ken Langone, came out and said he thinks Eli Lilly is going to be the first trillion-dollar drug company. And they're at a little over 500 billion today. So that would be a double from where they are. And it's crazy because when you look at the Eli Lilly chart, they did nothing from 2010 to almost 2018 or something, and then they've rallied so much since then. So to see that Prospero is still so bullish on them even after they've gone up a lot, and now this guy coming out, I think it just, fully forms a clear picture of bullishness on Eli Lilly, which you've been calling.
Yeah, I mean, like sometimes, for those that don't know, Steven and I, like, we'll talk about these topics beforehand, not because there's a script, but because like we're actually like I'm sorting through my ideas, I'm figuring out what I want to say. He actually researches the topics and brings to me, and he does a great job. Um, but the first thing I said to him is the what I say to myself all the time. It's just like Prospero knows. Like Prospero knew that before this guy did, before I did. Honestly, quite frankly, I've done some digging into Eli Lilly, some of the specific drug things, like have like, our Ozempic talk or like whatever. But a lot of these stocks, I don't like, I don't do nearly as much digging on as I would if I was talking about them in my prior life. Like, I would honestly be embarrassed to like have Eli Lilly in my portfolio as much as I have it been like one of like the top stocks like 10 years, and to know actually as little as I do about the company, but I don't need to, because like we practice what we preach here. And like I'm just like Prospero knows. Prospero has been sure about Eli Lilly. Like Prospero's sure about it because the institutions are sure about it. It's got a pretty high PE, like almost a 40, 2024 PE. Yet that upside breakout is always higher than that downside breakout significantly. High profitability plus growth. High net option sentiment consistently. Rarely see it low. When I see those things, I see a market that's sure about a company. So yeah, it doesn't surprise me that that's what's being said about Eli Lilly by other people, that it's going to get there, because like Prospero knows. Prospero knew that already before he said that. It's been knowing that.
It's so funny that you say that, because the short video that's going to go out on all our socials at 4:30, it's one that you mentioned, like standing on the shoulders of giants, which is essentially just what you said, like because Prospero is able to see like, what all the institutions are doing. So, and how you were saying, like you just believe in it so much, and I think it's cool to see, the CEO and the person who's built the algorithm and is now following it and using it so religiously as an investor. And it, for people that are watching and they see the results coming, it should, give them confidence to use the product too.
Yeah. Yeah, I mean, it's like I'll say like last year when this all started, when we had like our users that like doubled in a day, when we announced like basically my like 50% trade profits. Like there was like I bet the company funds on it. And there was a day like ultimately like, we turned about 50K into about 75K. And that was one of the things that actually like is the reason we're still around, because we were able to like float as like, we got things more ready and got to a place where we had investors. But like there was a day where I was like net option sentiment on QQQ was going down and I was buying puts, but QQQ was going up. And I saw like it was a huge swing day, and I was like levering it up and buying kind of out of the money puts to make it back based on that assurance. And like that corporate bank account went below 15K. And later that day, it was over 150. And after like, oh no, sorry. I sold when it was back to about, I cleared out my position when it was about back to about like 90. That was close to the end of the year. And I took some losses after that. There were some gains before that, up and down. But yeah, there was a time that day after I made a trade. I don't think I've ever done this. I actually 2 foot stomped, like out of like, because I was pissed at myself. Um, but you know, I bet on Prospero. I bet on Prospero because I think that like if I'm going to ask other people to bet on it, if I'm not willing to bet the company on the signals, like how could I possibly ask an everyday person to bet their life savings on what I'm telling them to bet on. And I think that's an important part of our story.
Yeah, that's a crazy story, and I hope everybody that uses Prospero gets to hear it. And I've said this before, but everybody thinks being like an entrepreneur is just a joyride, but there's some bad moments in there, and that sounds like it's one that went well, but it could have gone wrong, and it was definitely probably scary in the moment.
I was
And I
telling
see
one
that.
of my investors when I was in London, one of the first ones that believed in me, and like we all laughed about this because we're all like Wall Street people because it is actually funny. Where it was like, you shouldn't have done that, and I was like, no, I should have. I was like, was it too risky? Yes, 100%. Like 100%, it was too risky because like I don't come back from that. I lose the company funds betting. Like you don't come back from that as a CEO. And objectively, that's too much risk. But like the rule, and it's a funny one, and they laugh because of how true it is. There's one rule on Wall Street, and it's like it doesn't matter how much risk you take on. Like if you're right. Like you could like mortgage yourself to the gills, doesn't matter. If it goes wrong, you're a fucking idiot. If you win, you're a genius.
It's what do they call that? A binary outcome, right? Okay, I see we got some likes from the people who I was asking for. So thank you for that for the people that listened. Um, George is going to do his model portfolio today, about 10-15 minutes. But so let's run through some topics before then. So Tesla had some news today. They had a recall of over 2 million vehicles, which is essentially all of their USA vehicles, over a regulatory concern about their autopilot system. So I think the way Tesla works is they're able to do this over the air, like software update. So I don't think it's as bad as it sounds. The stock didn't really react much to it. So if you just want to maybe talk about the difference between like old recalls and like Tesla's version of a recall, which is not really the same.
I think that's actually pretty like cool and a good point. It's like, yeah, a software recall. That's a nice thing about like the level of automation and sophistication that they have in there. Like I actually like a lot of people, like one of the reasons I have an issue with like that is like I just see a world where you're like basically like buying the car and then still leasing it because you have like all these like monthly fees where like that's the world that we're living in because VC loves recurring revenue. So like we haven't seen the last of this where like you think you've bought your car, but you're paying for your car on an ongoing basis. That is going to be the world that we live in. But yeah, I think it's a cool thing that they can do, but also just like a really bad and I think this is one of the things that like I and I think that like this is a really important thing for all of us to do. And like it's a little corny, but like the whole like be the change you want to see in the world thing. But like, one of the things about there's like a motto that Uber had, which was like move fast and break shit. And I think that was that is how most startups operate. But Prospero is the opposite. Like I was the only one using the signals for 2 years and trading with them. We were moving as slow as can be because we wanted to stand out for the opposite reasons. We wanted to stand out for like saying like, oh no, we're not like sending shitty cars out there and like metrics that don't really work or like things that are like much more like marketing than actual idea. Like we wanted to be kind of the opposite of that motto. And I will say if that's one thing that I'll like take up with like Musk and a lot of other entrepreneurs, it's that they like because the market permits them to do that and the world permits them to do that, they take that slack. But I think we as a world should hold ourselves to better accountability and them to better accountability than that. Or that's just what we're going to get. This kind of thing where, I think we talked about the cruise automation story where like they basically knew that like their algos were not that great at detecting kids yet. Yet they pushed, like, they moved fast and broke shit. And like, a kid was an acceptable outcome to them. They learned pretty fast that that was not an acceptable outcome to the world, and they should have known that. But they were too much in that move fast, break shit mentality, that they didn't know it. And I think that like that is something that like that will only get better in my estimation when we as customers, as people, demand that the companies we give our money to don't behave like that. And we hold the people like, the people around you that are in venture, that are investors or whatever, like you tell those people that we don't want to make those sacrifices anymore.
So, from spinning from one Musk company to another, we're going to talk about SpaceX, which I learned is a hectocorn, which is when a company is over $100 billion and a startup, or I guess not public. So, I was surprised to find out that SpaceX is now more valuable than Lockheed Martin, Boeing, Verizon, and AT&T. So all those companies are like around $150 billion in valuation, and SpaceX is now 180 and still private. I think it definitely does way less revenue and business in those companies, but I guess the future is so much brighter. So, is that surprising to you that it's got a higher market cap than all four of those companies?
Wow. No, I mean, I think that like, I mean, there's so many things about space that are interesting. I mean, like among the many things is like, obviously, these government contracts, even if you can just be one of the space companies that contracts with the government, it's huge. But the real situation is that, and I love this. I actually love the story about Musk. And I think sometimes some people can't separate it out. So let me be very clear. Like, I am like super disappointed in him as a person and actually struggle to say good things about him overall because of who he acts like as a person. But sometimes you also have to separate out the business person and his genius in business and his questionable personal decisions. And like sometimes those overlap and there's a cost that like I haven't seen a big enough cost of him as a human that his businesses will fail. I am a little concerned about that next, and I've talked about that, but I haven't seen that yet. But that is all to say, like, one of the things that I do say is amazing about Elon Musk comes from this story about SpaceX, where like basically like someone close to him, and like this is something that his autobiographer said, um, came to him and was just like, what you starting a spaceship company? Like, do you know anything about space? Do you know anything about like astrophysics? Do you know anything? And he's like, no, no, I don't. He's like, but I'll learn. And like the story that I tell sometimes about that like actually reminds me of a story about me when I walked into like Columbia Business School when I was 16 years old, and I was sitting in front of like one of the most prominent value investors in the world, certainly the most on the value investing side. He runs the Value Investing Center at Columbia, which is the home of value investing. Of course, did I know this at the time? No. I like knew I wanted to go work there or whatever. And I just like sat down in front of him and said, I want this job. I'll learn. And when I worked at my first hedge fund, they tried to turn me down and they told me that I needed to know accounting to get the job. And they were trying to turn me away. And that is literally what I said. I'll learn. I'll learn accounting. And I did. And uh I think that is a very important part of learning to invest and just like anything at all. And like what I do admire about Elon Musk, where it's just like there are some people that will say they can't start a spaceship company because they don't know anything about space. And then there's people that'll say, I'll learn. And like if you are one of those I'll learn people and you decide to be one of those people today, you will get better at investing. You will be on the path to growth. And that's actually like one of my to tell the story in one different way. And then I don't know how many more topics we have, but this is one of my favorite stories about existentialism, which is one of my favorite philosophies. And one of the fathers of existentialism, Jean-Paul Sartre, was basically interviewed because a lot of people were like, oh, like existentialism, it's just like darkness and like it's defeatist and everything like that. And he actually was at this university and he asked people like, and he said, you don't understand this. Actually, you can just come ask me questions. And that was one of the questions he got. Like, isn't it so defeatist? Why are you so dark? And he just very quickly says, excuse me, but you've misunderstood. Like, what it is if you sit on the couch every day and don't do anything, you are a lazy person. You are your actions. You are what you do. But if you wake up tomorrow and start running 10 miles a day, like, you are not a lazy person anymore. Like, and that's the hope. Like, you can be defeated in who you are and you can weaken yourself, or you can decide to be. You can say, I'm going to be a better investor. I'm going to learn. I'll learn. That same attitude that I have. And that is the most powerful thing that I could ever tell you.
Oh, I love it. We need to drop more philosophy on more streams. I love talking about that type of stuff. Um, I know you have your update, but let's do two more topics quickly. So, Epic Games won an antitrust lawsuit against Google for the same exact lawsuit that they lost to Apple just earlier this year, which is surprising. Um, do you have anything to say on why they would win it against Google and lose against Apple? Like that's surprising to me that that would be the outcome.
Um, I mean, you gotta Occam's razor this stuff sometimes, right? Like, I just think like I think Apple like has a better like well, I mean, I think Google is like more of a monopoly to begin with, and people are starting to get like sick of that kind of thing, and like I would say punishing them in small ways. Um, and B, I think like Apple has a certain kind of like a certain kind of panache where like if you demonstrate strength, you get more strength. And like one of the reasons that I use Apple products and not Google or like whatever is cheaper is that like there have been various run-ins with the FBI where the FBI is trying to get Apple to unlock a phone. And they're like doing whatever they can, subpoenaing them, like doing whatever. And Apple's just basically like, you can pry these encryption codes from our cold dead fingers. Like, and they do it very publicly and they make it a marketing thing. But at the same time, like, that's the kind of attitude. Like, when you see an outcome like that, I do like Occam's razor, simplest outcome. It's just like, you know, maybe it's just that simple of an answer. Like sometimes when you tangle with Apple, you get embarrassed, and Google is much more likely to like roll over, just be like, oh yeah, whatever, we got our monopoly, we'll move over to the next. We'll move on to the next thing. But Apple like fights every battle, like it's the like, and the phone thing is the perfect example because it doesn't cost them anything to unlock that phone. It costs them legal dollars. It is not fun to battle with the FBI in the courtroom. That is expensive. But like to Apple, every little battle is that important because you get to win things like this that maybe Google loses because they're just like that's how like the government thinks sometimes. Like, do we want to tangle with Apple again? Not on this one. we'll like we got our Google win. We'll fight Apple another day. They're a pain in the ass to fight with.
Yeah. And so the last thing I want to get to today, because it's happening December 18th, so it's timely, is that there's going to be a NASDAQ 100 rebalance. So if anybody owns any of these stocks, it's going to be either bullish or bearish. But so these are the ones being added. It's 6 stocks for each one. CW Corp, Coca-Cola, Euro Pacific Partners, DoorDash, MongoDB, Roper Technologies, and Splunk are being added. And being removed are eBay, Lucid Motors, Zoom, JD.com, Align Technology, and Enphase. So a lot of the ones being removed, I know of hearing as they've had, what you want to say, cult communities following, like Enphase, Lucid, but those stocks will probably have a bearish reaction and the other one's bullish, right?
Yeah. Oh, but like that reminds me if Enphase is still in my portfolio, I'm going to get rid of it now. I think I already got rid of it, but I better get rid of it now. But I think unless we have anything else, I think it's time. I've been like setting up the model portfolio, but I think first I will I'll show you guys what I was talking about. We'll do a little tour of so first we'll do Slack, and let me just get here. First we'll do, I'll set this up too. Might as well get everything set up as I wanted to. We'll do Slack first, right? Look at this. Like here I said we got this. Like I was like 90 minutes. I said in about an hour and 9 minutes at 3:51. I end up setting the first draft 3 hours later. What was I doing? Debating between Broadcom and BKNG. And I like stuck with it for a specific reason. But I'll show you what I saw. These are the first few days after that. On the daily, Broadcom was going down, even though the technicals on TradingView, like in a different way, like we kind of saw this like negative like momentum on the TTM squeeze. So I backed out. So like I said, I made the decision for the right reasons. But now we're going to jump in and we're going to first do our like chop off analysis. And that is just very simply, we're going to go in. Yeah, we're going to post our tickers. We're going to put a 1 next to them. We are going to, no, I think that should work. Put a 1 next to them. Then we're going to do this. We're going to do lookup. Comma. Damn it. Comma 2. I have this. All right, now we want to build our filter. I think we want, definitely in this market, we want net options, we want growth, we want profitability. Do we care about social? I don't think we care about social. I think we actually want 2x net option sentiment. We've been doing that lately, making sure we're like properly emphasizing that relative to the other things. Do we want anything else? No, I don't think we want anything else. Okay, so we are going to do, since this is a bull.
George, you got a question? If these are only available for paid sub trading group and paid sub investing group.
If what are?
I believe this portfolio update.
So I mean, normally, you're watching this like any, the trading letter is what gets you the real-time updates of this stuff. And then we want to do, well, actually, we just want to do this. So this is what I'm doing. Like here, when I talk about like just like chopping off the bottom, here we go. I think these 12, because I actually do want to keep America's car mart, I think. But the rest of these, we're dropping. And then we're done with that first part. So we're dropping this, and we're gonna make it a 1x. Why is this like this? Exit short. We're going to get rid of one of our 3 QQQs. And then we're going to We're going to enter long. One more IWM. So we're now like, so we'll be 4. Right now we're 3 long IWM and 3 short QQQ. We're going to be 4 long IWM and 3 short QQQ, right? Okay. So we have this. While we're here, I just want to do a quick like long maintenance check. Which is basically looking at these. And I'm just doing like something very similar here, where like the nice thing about what you saw me do right there is that like I don't necessarily care the technicals. I'm just trying to like change the makeup of the portfolio. So I don't really care what the technicals are. I'm just like getting rid of the worst things in the Prospero signals, and that makes it like pretty easy for me. But now this is like my typical maintenance check where
We
I'm
got
just
another question, but I actually know this answer. I believe he's asking how often are the parameters refreshed, and it's every 3 minutes in the app, correct?
yeah. It is oh shit, I need to get TPIC out of here. Like actually I like might even want to get it faster. Let me see what's going on with TPIC. I like this is wait, what's going on? 30 minutes. Yeah, I need to get the hell out of here. Sorry. Quick interlude. I want to get out of TPIC like right now, and I'm going to send out an update. This is the kind of speed that you can hope for in our trading letter. I see something right away, and I'm just like, oh, I don't like how this is going.
What are you seeing so bad that you want to act so quickly?
Well, like you can see like basically on the 1 day, it's like it's still down. But if we're like in the 4 hour, it's still in a downtrend. But then by the time I get into 1 hour, this downtrend is leaving. I get to the 30 minute and it's actually like in an uptrend. That is like a screaming sign that shit is about to like go in the wrong direction fast. So like, yeah, I could be underwater on this. Like the reason I'm doing this right now is I could be underwater. Like it could be up by the time I'm done with this letter. It could be up 20%.
Understood. So the shorter the time frame you looked, the worse your trade looked, basically.
Yes, exactly. It got like I was like, oh, this is pretty definitively moving in the wrong. That's what got my interlude. All right, now back to your regular schedule program. We want to look at SAIA for a long exit. That's not going in the right direction. That's not looking good. See, opposite. Like we're seeing some confusing signals. We're gonna let SAIA chill for a second, even though I don't love it in that signal. We're just like generally liking diversified longs more, and I know that's part of our diversification. Let's check out PH. Don't love that. That looks okay. We'll leave it. We'll leave this. All right. So I think that is, we have our this. We have an enter long. We have an exit short. Now we're going to get to the actual portfolio part. And we have this set up. Actually, let's see. We want more names. Yeah, we can fit more names. I've been meaning to do this. 15. Can we fit 5 more? Can we go 20 and 20? Let's see. Yes, we can. That's a perfect fit. It's going to be a bit long. All right. No, it's full list 1541. Oh man, it's been a while. Is there anything else that we can do while we're doing this? Yeah, we can pull this down. We can pull this down, this down, this down. We can do this. Oh, I know what we can do. We're going to check on option sentiment on QQQ. All right, it's at 40. Oh, it is a little bit softening on us on QQQ. All right. And and that's what I was waiting for. Perfect. Okay, 12, 13. Now we got these hot off the press metrics. Just going to take a quick look at what we have here. Upside, dark pool, blah, blah, blah. Okay, I got that. And we're off. Dark pool. What happened there? What's going on? I don't know what happened there. Not sure what it's doing. Don't know, don't care. There. We want social. Then we want growth. Get rid of this, minus this, plus this, plus this, plus this, plus this. Short pressure less than 5. I'm cutting ones that I believe we own already. I think the rest of those are good, and I think we have 20. Whatever. If we double up, we double up. Let's see what's going on with these. What is Orly? How many of these do we have? 20. That's perfect. I don't think we own that either. I think we're gonna. All right, I think we definitely own Tesla too. And I kind of want hubs. I want all of those in. I think we own this. And this, and this. Okay. Now we're just going to go. We don't have time. I believe this is 20 again. Yes. Okay. Okay, there we go. That's in. We have that there. Now we just have to do no. Oh, I think we want to do this. There we go. I think we have a Google open, and I don't know if I want to double up on it. Yeah, I don't want to. All right, we're getting CMG. The nice thing about all of like the cutting that we did means we don't necessarily have to, we don't need to get longs here because we already cut shorts. No, we're not doing Microsoft. No, we're not doing Microsoft. Microsoft. You know what? I'm just doing it here. I don't want to like. All right. We've lost on rope a few times, but I've been really liking SNPS lately. What's going on with it? Do we have SNPS? I do kind of like it. No, we're grabbing it. I like it. I don't know if I want to get into Broadcom again. I'll look at ASML. I was in, I was out.
Oh, while you're doing this, George, let me just tell our viewers that if you missed it, we have a live stream. If you look at our channel from earlier this week, where we had our billboard up in Times Square. It's only like a minute and a half long. So if you're interested, go check that out after this is over. It was awesome.
Oh, look at this O'Reilly stuff. Yeah. We're grabbing that. Whoa. What the hell is going on with this thing? Well, we might have missed it, but we're taking this ride if it keeps going. But then I don't think I'm going to do Amgen too. Yeah, we're doing this. Well, look, we got a lot here. All right, now we're going to hope we pick up some new bears because we chopped a ton of bears there. So we're going to hope that we have some new ones because otherwise things might get pretty unbalanced. But we can't control that. Okay. How are we doing that time? 4 minutes. Great. No, Western Union. Yeah, no, not happening. I've seen you missed a few times. Milestone. Oh, yeah. We are getting in missed. We're missed short people now. Can you look up what this company does? ALKS, Steven? Actually, it doesn't matter. I don't think I'm gonna. Yeah, we're not doing it. It doesn't matter.
Now I'm curious.
Wave Life Sciences. Oof. Up. What's going on here? Are we gonna like do biotech? All right, we're gonna get this as a bear, but we're gonna be careful. Maybe I'll add Amgen too, just to make sure we're doing long short. We're pair trading here now, guys. Yeah, nope, we're gonna do that. If we're gonna add WV, we're also gonna add Amgen. No. One that we can pass on finally. Owen. More biotech. This was a mistake. We should have filtered this more. We might have to add more bears tomorrow, but Wish is just like going off. It's up 10% today. I don't know if I have the guts.
Short squeeze, maybe?
Yeah. I don't know if I have the guts to do this. I don't think I do. No, I don't. And there's no shame in that. No, more. Jesus. No, it doesn't even matter. It's too big of a. Diabetes care. I don't know if that's straight. Regardless, it's up 7%. I'm not messing with that. Pharma. I think all of these are pharma. All right. We need to go do one more thing. We need to add a few more bears, and we need to get the hell out of this biotech problem. And we're just going to do it manually, basically. We don't want real estate. We don't want healthcare. I'll just take those out and see what we have. Oh, urine is energy. Okay. I think we're already short that. We could potentially double it if we don't like it. Oh, yeah, for sure. We're definitely doubling that up. All right. And then I just think we want to find one more, and I'll feel comfortable. Sun, West. Sunworks. 15%, no thank you. XXII. We can do better than this, I think. Yeah, we can do better than this. FHI. No. Spirit Airlines. No, I don't think there's enough. All right, we're running out of time here. Running out of time. BYD. I think we've been screwed on this before. Boyd Gaming. No, not doing that right away. Fun is an interesting one. That could screw us, though. No, that's just way too low. We're not touching that. NTR, no. We got to send this out soon. Oh, this has potential. No. No. All right, we just have to get this out soon. Just want one more. We're not gonna. It's not gonna happen. Gonna have to give up in a second. SPWH. Okay. Yeah, we're doing it. SPWH. Done. Where are you? SPWH. All right. More sending. All right. I think that's a wrap.
The end of a good stream and a bullish day.
Yeah, a lot. I was overdue on that portfolio maintenance.
Mm-hmm. Yeah, and like I said before, if anybody's still around, there's some interesting videos for you to check out on our channel from earlier this week. We had some cool Prospero events, so yeah, go check those out.
And yeah, D Curtin, I think we've had an interview. You can always feel free to ping me on email. I'll get back to you. Like, yeah, IWM's not in because we have a rule that we need to cover a certain amount of the stocks to have the ETF in, and we don't cover we have to cover 90% or more, and we don't cover 90% of the IWM, so we can't, in good conscience, produce a result on it, unfortunately. But we're working on it.
I think that makes sense. And yeah, are we going to be on normal schedule next week, Monday morning, Wednesday afternoon?
Yeah.
Okay, so we'll be back Monday morning for everybody. Normal schedule. See everybody there.
Thanks a lot. Bye-bye.
See you, George.